Alright, today is Wednesday, November 18th, and this is a post-market review for the stock market activities today. I do have a lot of stuff for you. We will cover the usual, but we do have special coverage in the futures market. I will explain to you why coca futures are exploding and how you can profit from very interesting trade ideas. I also got charts for you. We'll cover the usual: the SPY, the Qs, dollar index, gold, TLT, TNX, the VIX, Apple, and Tesla. But this time around, I'm also adding Honda Motors because I shorted Honda, and I'll show you why. And I also have the chart of Alibaba, Innovo, Hershey's, and General Electric. With that being said, here we go. Today we saw the indices melting down by the end of the day. Very interesting change of tune from the last few days of trading. And here we see the Dow in the red, severely down 344.93 points, or a decline of 1.16%. The Nasdaq also in the red, down 97.74 points, or a decline of 0.82%. The S&P 500 in the red, declining 41.74 points, or 1.16%. An identical percentage of decline for both the Dow and the S&P 500. What about the sector's performance? Horrible across every single sector. We are not going to give any medals today, although we have the consumer cyclicals sector barely closing in the green, but the rest of the performances are abysmal. Leading the decline: real estate, energy, and utilities. And what's going on here in the futures market performance? Right away, we do see the VIX futures climbing higher. But here we have oil up another 1% or so. But the notable action is in softs. We have massive gain for coca, and we saw the coca prices exploded higher the last few days. Here is the reason. We do have a price war between coca producers and the traders in the New York and the London exchanges. What does that mean? It means that the two largest producers of coca in the world, the Ivory Coast and Ghana, are doing price gouging. Number one, in the Ivory Coast, the problem is that they had an election on October 30th, and the opposition party is refusing to certify the election's results. Does that sound familiar to you? And now we do have political turmoil in the Ivory Coast. What about Ghana? The problem in Ghana is dry weather and the COVID-19 crisis, so Ghana is imposing an additional tax for coca importers because they have to supply the farmers with more aid. So what is going on here? Coca importers are refusing to pay the extra tax, and they're struggling with the shortage of supply from the Ivory Coast. So they're resorting to the New York market and the London market because, remember, the December contract of coca, those beans are already arrived in New York and in London. They're already here. So traders, instead of importing coca from the Ivory Coast and Ghana, they're now stampeding to buy whatever beans are available in New York and London. And thus you see the massive squeeze that is going on in coca futures. Matter of fact, the December contracts are surpassing the March contract due to the stampede. Now, what does that mean for particular stocks? That would add more pain for Hershey's, Mondelez, Nestle, all of these companies that rely on coca imports for their products. So what did I do today? Remember that trading coca futures is very expensive due to the price. So instead, I bought put options for Hershey's. And now you're looking at a chart of Hershey's, and these put options are already profitable from today's decline only. But I do see further declines for Hershey's here, and my target is the 145.50 level to close the gap. So that is the story with coca futures. But we did also see gains for cotton. Here is our friend OJ, another day of gains, and I did close my OJ contracts at a profit. Maybe I'm leaving some money on the table here, but I'm satisfied by the levels of profits that I have right now. Here is a chart of OJ, and you see that the entry point when I told you to buy OJ due to the tariffs from Europe, it was at the price of 115. That was the entry point, and I see the exit point at 129.5. I'm not waiting for that. I already exited my contracts today. And we do see further gains for coffee. However, lumber taking a break and declining by over 2% today. The weakness in lumber is still here. We saw a little bit of a rebound, but the weakness remains. The pop and the peak, the heydays of lumber trading was in the summer. Now the party is over. Modest gains for sugar today. What do we see in metals? Gold declining. The picture is not looking very good for gold here. We saw a lot of pain in gold miner stocks today. Silver declining by over 1%, but we do see platinum continues to gain. Copper moving down, and I see a ceiling here for copper. I'm looking to exit my Freeport McMoran holdings. Palladium, a gain of about 0.5% or so. And what's going on in meats? We do see the live cattle, but specifically feeder cattle, declining today. These two been having a run, a very impressive one, and perhaps it is time to take a break. And we do see modest gains for lean hogs today. What's going on with grains? The hoarding from China continues. And by the way, if you track the prices of grains since China started hoarding, you will see very, very impressive gains. Specifically for corn, up over 40% in less than 2 months. And today we continue to see gains for soybean oil, corn, wheat, rough rice, oats, and canola. At some point we will hit the peak of hoarding from China and we will see supply surpassing demand. But until that point, grains futures will continue to gain. And now, moving on to the big casino, the options market. The most active options today coming up at number 1, Tesla. Yesterday, we did see an uptick in options trading for Tesla, but it was not enough to push the name really, really high. It actually declined from the highs of the day. Today, it is a different story. We're seeing that option trading in Tesla is starting to heat up once again, and we are seeing option traders migrating from NIO back to Tesla. NIO reported earnings yesterday, and we are seeing declines in the volume of option trading for NIO, and we are seeing an uptick in options trading for Tesla, and you see that Tesla closed up big today. And the volume here is 1.6 million contracts. About 65% of those were calls. NIO at number 2, but you see NIO declining for the day. About 1.26 million contracts traded today. 62% of those were calls. And at number 3, Apple with about 1 million contracts. About 63% of those were calls. Any interesting trades today? Yes, we do have plenty of interesting trades. Starting with Space Virgin Galactic. And this was a very notable trade here because the trader spent about $2 million on this trade alone today, buying the 28 calls expiring December 18th, expecting a massive gain in the name of about 24% minimum gains until expiration date. Very notable here. And we do see Tesla yesterday. The trader bought calls, and that was a very smart trade, very profitable today. Now they're buying a put, perhaps betting on a reversal tomorrow. And the put here for the 450 strike price, expiration date next week. And the trader here is looking for a decline of about 7% or so. The price for these options is actually not that bad. It's about $600 per contract. Again, Tesla options are trading on a discount right now because the VIX is trading lower. This might not be the case next week. And we also see a bullish bid for Nikola coming back from the dead, buying the 30 calls, expiration date next week. with expectation that Nikola will gain over 18% by expiration date. And again, this is a big bet, costing the trader over $500,000. And here is another one for TripAdvisor, TRIP. They're buying the 28 calls, expiration date December 18th, with expectation that the name will gain over 5%. And again, this is a big bet, costing the trader over $500,000. We do see notable activities here for calls, KSS. We saw a lot of put options buying. Now they're buying calls instead on calls. At least this particular trader making a wild shot, buying the 35 calls, expiration date next week. And it is a wild shot because this trader is expecting the name to gain over 22% by expiration date. Remember that calls is reporting earnings, I think, tomorrow. Here's another big bet for Lyft, buying the 42.5 calls, expiration date next week. Another one for Freeport-McMoRan, buying the 18.5 puts, expiration date December 11, with expectation that the name will decline over 11%. Again, I'm looking to exit my Freeport-McMoRan holdings, even though I love the name and it's been one of my best performers since I bought it. But perhaps it is time to take some chips off the table and raise some cash. Continuing with interesting trades, we do have Apple. They're buying the 140 calls, expiration date New Year's Eve, with expectation that Apple will gain over 18% by the end of the year. We saw a similar trade for the 130 calls yesterday. And again, a lot of you said that, hey, this is a sucker's bet. Somebody's selling those calls because he or she knows that Apple will not trade anywhere near 130 or 140 by New Year's Eve, meaning that they're raising cash from selling those options. We do have AZN, AstraZeneca, another vaccine name here. They're buying the 57 calls, expiration date by next week. So are we going to see another vaccine Monday next week from AstraZeneca? This is what this trader is betting on. I do see another interesting trade for Teladoc. Remember, the name declined a lot from the top, and this particular trader is buying the 200 calls, expiration date next week, with expectation that the name will gain over 10% by expiration Friday. Here was another interesting trade from the same trader for Tesla. They're opening a trade for the 460 put, expiration date next week, and for the 530 call, also expiring next week. And perhaps this is sort of a naked iron counter where the trader is confident that Tesla will trade in range, and that range is between 460 and 530, and they're selling the upper and the lower limit of that range to raise cash. But it also could be that the same trader is betting on a wild, volatile movement in Tesla next week. They don't know where the direction is, so they're buying the 460 puts and the 530 calls, and they believe that with the increase of volatility perhaps next week, that one of these trades will explode in value and will make the trade profitable overall. And remember, for every seller, there is a buyer. It is a trade after all. And we do have more bearish activities here for General Motors. This particular trader is buying the 39 puts, expiration date December 18th. GM again has been on a tear. I sold my entire stake in General Motors to raise cash. It's been very profitable for me, over 60% run. That is insane for an old school automobile company. So expect a pullback, but I am bullish on the long-term story for General Motors. So I'm looking for a more attractive re-entry price. And here is another one before we move on from the options trading. For Space, they're buying the 24 calls expiring next week. Lots of bullish activities here for Space. And now, moving on to the headlines that shaped the day. And right away, we've been criticizing Apple for their mob-like practices of shaking down app developers. Apple is listening now, and they're cutting the fees by half for small-time developers after the backlash. And remember, Apple is doing this because they are no longer an innovation company. They're failing to increase their market share and increase the revenue, and now their profits are being squeezed, so they're trying to do everything they can to improve their margins. They're not shipping the bricks in the new iPhone, saying that, oh, it is good for the environment. That is bullshit. They're just trying to cut corners to save some money. But what do you do when you are a technology company and you are lacking that important thing we call innovation? You resort to mobster-like behavior. You shake down app developers in the monopoly that you call the App Store. If you don't pay us our money, we crack your kneecaps. That is the story with the iMob. And moving on to another important news for Boeing. We do have the FAA finally recertifying the MAX 737 to fly once again. Now, you would think that this is positive news for Boeing, but the price action for the stock today was very interesting. We saw a pop in the morning, and then traders sold the news, and you saw Boeing closing in the red. It is positive news for Boeing. However, the challenges are racking up with the resurgence of the virus and the abysmal outlook for the travel industry. And this is, by the way, according to Bill Gates, who says that more than 50% of business travel will not recover even after the vaccine and after the COVID-19 crisis. I don't know why Bill Gates is acting like he's the grand Ayatollah for this country, commenting on everything from the vaccine to business travel. I guess we need his opinion on everything now. And check out this piece of news. Pfizer releasing new data about the vaccine. Remember, Moderna said that their vaccine is 94% effective, surpassing the 90% effectiveness of Pfizer. And now Pfizer is saying, oh, wait a minute, we're actually 95% effective now. And my response is, can I hear a 97? How about 99? How about 110% effectiveness? I mean, even the Putin vaccine didn't do that. They said instead, let's make it 92% effective. Even the Russians had some shame of exaggerating the efficacy of the vaccine too much. But our beloved pharmaceutical companies have no shame, and big pharma executives continue to dump stocks week after week. And what is that behavior doing for the public confidence regarding the vaccine? Not so good. We see that across different countries, when people are asked, would you get the vaccine if it is available? We see that the public confidence has declined from August to October, saying that no, I would not get it, even though over the summer they said they will get it. So congratulations for big pharma executives who destroyed the public confidence in the vaccine. They get richer in the process, no problem, no punishment whatsoever. And here is more macroeconomic news. European car sales slid over 7% last month due to the closures from the resurgence of COVID-19. We talked about the manufacturing output increasing last month here in the US, and I told you that this is a lagging indicator, meaning that auto manufacturers are playing catch up with the demand. However, the majority of the demand was already satisfied during the summer and September. So we're gonna end up with excess supply of automobiles in the next few months, and the demand will not rise higher. So you will have a great opportunity to buy a new vehicle in the next few months. And this is why we said, let the stampede happen over the summer. Let the morons run and pay these premium prices for vehicles because the prices will come down. Similar story with the housing market, by the way. And what's going on with market sentiment? The mania continues. Here is Credit Suisse saying that they're bullish in stocks in 2021 because even if 2021 is bad, the market is bullish on 2022. So the market is looking forward. They're playing these mind games. Why is the market rising in 2020? When we are having the worst global recession ever? Oh, because the market is looking forward to 2021. And now that the outlook for 2021 is not as rosy as these quote-unquote experts predicted, now they're saying, oh, the market is looking for 2022. How about we say that the market is blind as Stevie Wonders and have no clue what it's doing? It is just looking for more cocaine, aka Fed liquidity and fiscal stimulus. That is all what the market cares about. Furthermore, JP Morgan, the Landromat, now saying that stocks can climb another 15% next year. Even though the short-term declines in Q4 earnings, the market will pass on that and will look ahead for 2022. 2021 earnings instead. Oh, that's beautiful, isn't it? But here is the reality. We are in the most overvalued stock market ever. And you do see the correlation between forward PE ratios and the money supply from the Federal Reserve. The stock market is just following the cocaine from the Fed. That is it. The market is not doing anything rational right now. Everything is overvalued, and you'll be out of your mind buying stocks right now saying that you do have a long-term outlook. Again, maybe you're blind and you're seeing a different picture. That is okay. But the reality is the market is just following what the Federal Reserve is doing. And when we hit a speed bump, what is that speed bump, by the way? When the supply of coke suddenly gets interrupted. Meaning, don't worry about monetary cocaine supply, because the Fed, as I illustrated to you last night from Boystick's comments, saying that we got more juice to supply, but they don't want to burn their cards right away. The Fed been saying, oh, let the fiscal stimulus do the job, meaning we could offer more coke, but we do need the government now to pass a stimulus. But what is going on with stimulus? Here is Mitch McConnell saying that he is open-minded for about $500 billion of stimulus, but that is it. Remember, the market wanted over $2 trillion in stimulus. Now they're getting only a quarter of what the market wants. Quarter of the cocaine. And the majority of that cocaine is going in PPE loans and stimulus checks, which is good for the stock market, but not good as expected. But maybe the market will start looking a little forward to 2025 when some of those senators die from COVID-19. And maybe then the Democrats will have a majority in the Senate and they will pass a bigger stimulus. So let's keep looking forward until we fall off the cliff. Moving on to the heat map analysis and what a difference a day makes. Today is a sea of red across everything. Let's start with the technology sector and finish with the financial sector via clockwise rotation. Right away, we do see weakness across the board here. The big boxes of Microsoft, Apple, Sony, Adobe, Oracle, Cisco, Intel all closing in the red. But we do see notable outperformance here from TSM. Taiwan had a massive gain on Monday, a decline yesterday, another rebound, smaller one today. But we will perhaps see further declines tomorrow because Nvidia reported earnings and the name is declining after hours. Some gains here for Shopify. Shopify been getting hit hard the last few days. Today it is catching a break. AMAT outperforming, but we do see weakness in software, in ServiceNow, Workday, Trade Desk, Team, but also a notable gain for DocuSign. DocuSign rebounded today along with Zoom and Peloton. These three names are the stay-at-home names, the hot stay-at-home names. What's going on in communication services? We do see Google, the big boxes of Google and Facebook, down about 1% apiece. Weakness in the video game sector, Electronic Arts, Activision, Take-Two, all down significantly. The notable outperformance here is from Zoom, rebounding 3% or so, and Snapchat. What's going on in the consumer cyclical sector? The big box of Amazon is down about 1%. We do see further weakness here for Alibaba, Wayfair declining once again, and we do see Lowe's. Lowe's reported earnings today and the name was down significantly right away. Another day on the downside for Home Depot. Weakness across the board in cruises. Norwegian Cruises reported earnings after the bell yesterday. They were not good and they took down the entire cruise industry with them. Bad day for Marriott, packaging, restaurants, with some exceptions. We do see for apparel, TJ Maxx closing in the green. TJ Maxx reported earnings. They're better than expected. And this name is in our rotation trade selections. The outperformance in the consumer cyclical sector comes from auto manufacturers. Tesla, of course, the momentum from the inclusion in the S&P 500, another big day for Tesla. We do see momentum here in General Motors, Ford, Ferrari, but weakness in Honda Motors, and I will cover the chart of Honda during the charts analysis. What's going on in consumer defensives? Target is the outperformer here. Target reported earnings in the morning, better than expected. This name remains the strongest momentum name in the big box stores, closing up big today. But the weaknesses in Procter & Gamble, Unilever, Estee Lauder, Clorox, even beverages, Coca-Cola, PepsiCo. We did see gains for Monster's beverages yesterday. Today the name is declining. More pain for beer, tobacco, liquor, and check out Cisco down big today. What's going on with REITs? The outperformer here is Crown Castle, closing over 2.5% today. But when you look at residential REITs, down big today. Office REITs, industrial REITs, shopping REITs, all declining significantly. The only sector within REITs that managed to close slightly in the green is mortgage REITs. Another big day of pain for utilities. You see Dominion Energy getting whacked again, American Water Works, NextEra Energy, Duke, a lot of names experiencing a lot of pain here for the utilities sector. We did see yields for the 10 years Treasury climbing higher today, and when Treasury yields climb, utilities lose their appeal. What's going on in basic materials? Another day of pain for gold miners. Newmont, Barrick Gold, all declining significantly today. Big declines. We did see copper weakening today. Freeport-McMoRan closing in the red, and also weakness among iron, nickel, and other material names. What's going on with energy? We've been witnessing the outperformance of energy the last few days. Today it's a different story. Energy declining. Chevron down over 3%. So did Exxon, Phillips, Kinder Morgan. Everything got whacked today in the energy sector. Industrial, the picture is in the red, but it is a little better when you compare it with other sectors. The notable decliner here is Boeing, down over 3%, massive reversal from the gains in the morning. And we do see Honeywell been on a tear. Now that the media was talking about it a few days ago, look at the rally in Honeywell, it caught eyes, and now they're dumping the name. Airlines are mixed, but we do see weakness in railroads and ADP for staffing. The notable gainers here, some of the defense names, Lockheed Martin, Raytheon, Caterpillar outperformed today, so did Emerson Electric. Just slightly in the green. What's going on in healthcare? Pfizer rebounding just a little bit, but it is a pathetic rebound, not notable at all. Johnson & Johnson getting whacked today, Bristol Myers, AstraZeneca, Amgen, and even in diagnostics, Thermo Fisher down over 5% today, massive declines. CVS, the pain continues. Health insurers from United Health to Humana, Anthem, all closing big in the red. McKesson getting whacked, Abbott, Regeneron. You're seeing the whole vaccine pump being dumped today. What about financials? We see Charles Schwab was outperforming yesterday. Today closing big in the red. We saw an outperformance earlier in the day in Goldman Sachs, in Morgan Stanley, but both managed to reverse by the end of the day along with the overall market. Continuing weakness in credit services, down day for Visa, American Express, Capital One, PayPal, even MasterCard down just about a little bit. Financials, Bank of America down big, over 2%, and we see regional banks starting to show some weakness. Remember, I'm looking for a shorting position in the KRE that tracks regional banks. We did see a little bit of a bounce here in the TNX today. If it fails to build up on the momentum, that would be my signal to place a short bet against the KRE. Moving on to the rotation trade. Let's see what's going on here. Both sectors closing mixed, more to the downside than the upside. But let's take a look at the momentum names first. Tesla, we know the story, but the weakness across big tech is notable now. However, it is rebound day for the three hot stay-at-home names: Zoom, Peloton, DocuSign. And by the way, I do think that Zoom will outperform in the next few days, so you might want to think about buying a call option for Zoom, because the thinking among the trader community here, specifically new traders, that Thanksgiving will boost the usage of Zoom. And some people who never adapted Zoom will now adapt Zoom after they use it during the Thanksgiving holiday here in the United States. Now, things could go wrong. We could see glitches for Zoom and overloads and all that kind of stuff. That is on the table. But if you want to take a wild shot, buy some call options for Zoom and bet on a rebound in the short term. What's going on across the aisle for the comeback stocks, the reopening names? We see big declines here for Coca-Cola, Chevron, American Express, Live Nation, Cisco, Planet Fitness, Marriott getting whacked today. Very few names managed to close in the green. We talked about TJ Maxx, Emerson, but we do have MGM Grand and the Cheesecake Factory closing in the green, and General Motors. Again, looking at these activities here, remember I'm starting to dump a lot of names in my portfolio. I'm raising some cash and I'm looking for bag holders. I still have American Express, Marriott, but I'm looking to dump these names entirely. So if you're interested in being a bag holder, let me know in the comments. And now let's move on to cover some charts. Starting with the SPY 15 minutes chart, we traded pretty much in the flat line. We weren't going anywhere. And at the end of the day, we flushed down. We had a massive reversal to the downside. CNBC, of course, and the media are trying to say, oh, it is the closures in New York. New York decided to close schools. We're talking about New York City here. And this is the reason for the panic during the closing hour. Now, that could be the case, but I do think that the market is running out of steam here. There are no new entrants to pick up the rally from this point on. The mysterious entity been pumping and pumping overnight, but we didn't see a response, a big response from retail traders and the money on the sidelines to pick up the rally. And perhaps the big whales are now thinking, well, it is time to sell, I guess. There are no buyers anymore, so we'll take the price lower and see if that would be attractive for the players on the sidelines and retail traders to buy. So they will try. Here is the next support level, 353.25, and we do have plenty of support levels going down, but let's take it one step at a time and see how the SPY will react at 353.25. I doubt that this is the level that players on the sidelines are looking for to enter the market. It could be a lot lower than this point. But remember, we have the resistance now at 359, so we'll watch and see what the SPY is going to do overnight and during trading hours tomorrow. Now here is a clean chart for the SPY, and you do see the reversal today. It is a reversal. There's no ifs or buts about it. It is a very notable reversal candle. And the question remains, we have all these gaps and the market's going to start going down and down closer to the 20 days moving average and see which level will be attractive for the players on the sideline to hop in the game and pick up the market higher. Ironically, the control of the market right now is in the hands of the players on the sidelines, meaning that we will see frustration from current market participants. They will start dumping in smaller numbers, pushing the market lower and lower, waiting and waiting for the point, the entry point that players on the side will see as the attractive point of entry. If that doesn't happen, more and more current players will start dumping and we will see the flush down scenario. We're not seeing it now, but we might see it in the next few days and weeks. And here is the argument. Remember the bear flag? Now, the candle on Monday might have thrown some perspective out of the window and created some confusion here because the technicians who are still holding the bear flag theory, they're saying, look, the bear flag did not change at all. Monday was the exception, and the bear flag formation was always on the table, and we will see the next leg of the bear flag flushing to the downside. I'm not supportive of the bear flag theory. I think Monday's candle killed it. You have to be consistent here. You cannot go back and forth to fit your narrative. I do think that we have here is a failure to capture all-time highs. Reversal before capturing the former high is a very bad signal, very bearish signal, because you're making a lower low and you're seeing indicators such as the MACD and the RSI curling downward. Again, whatever narrative you want, the bear flag, the lower low, it doesn't matter. The picture is clear. We saw a reversal today, a failure to capture all-time highs, and the picture is starting to turn bearish. What's going on in the Qs? 15 minutes perspective. Again, the Q's been trying to hold on the support level of 292. We talked about the weakness at the end of the day yesterday, and I said we could see a continuation of the weakness. Today, we did see that. The market tried to hold and hold for 292, and at the end of the day, got rejected and flushed downward. So where is the next level of support? We're looking at 285.70. We'll take it one day at a time. If we do see massive gap down overnight, then we're going to look lower. And for that, let's take a look at the daily chart. We have the famous gap at around the 274 level. That could be the destination for the second leg of the bear flag. Because remember, the bear flag formation was still alive for the Qs. And you're seeing the second declining leg from the bear flag starting to form today. What do we see in the VIX? We talked about the VIX trying to break from the massive decline. It was a massive drop from a cliff, and the VIX is trying to hit its feet on the ground, trying to break and stop the slide. It looks like the VIX succeeded in stopping the declines today. We did see the VIX climbing higher, closing in the green, and both the MACD and the RSI indicators are climbing higher. Our goal and destination here, we need to see the VIX closing the week above the pivotal level of 24.8. Not just by a little bit, but decisively. And that would signal the beginning of the reversal in the market. What do we see today in the dollar index? The dollar been muted, not doing anything. But from a daily perspective, we're seeing the dollar making these doji or pin look, whatever you want to call it. But I see them as an indication that the dollar index is looking to perform a final act before declining to the downside, meaning that there is another pop for the dollar index here, and that would coincide with a reversal in the market. So you have to read the tea leaves here and how the charts are speaking to you before the events actually take place. And this is what the dollar chart is telling me. It is saying, wait a second here, I do have a final act to perform before saying goodbye. 3 days in a row, and the Dixie closing well above the lows. Now, what does that mean for the chart of gold? It means that unfortunately, and I say unfortunately because I wanted gold to climb higher, but it looks like that gold is forming a bear flag and it will decline all the way to the levels of 1800. This will come hand in hand with a surge in the US dollar. Again, you have to read the tea leaves and how the charts are speaking to you. What's going on in the TLT? Another day of a gap higher. We saw a mini failure there. You see the big red candle decline around 10:30. It happened because we did have an auction for the 20 years bond, and the results were abysmal. There was no demand on the bond from the auction, and I do think that Rick Santelli of CNBC, who covers the bond market, gave it a D score. And you did see the TLT flushing to the downside. However, the reversal in the market also coincided with a reversal in the TLT, and you saw traders buying the dip in the TLT, pushing it higher. I still need to see more conviction buying of the TLT before I call the reversal. The action today is good for the bear side, but it is short of what we need for the market to reverse. And remember, this week is options expiration week. OPEX, and a lot of funny activities will take place before Friday's expiration, meaning that the market could pull a trick showing you that it is declining today and there is a reversal, and then what do you know? After all the call options in the market expire worthless, they reverse the market higher again. And this is why I'm saying I need to see more conviction in the reversal. I did not see it today. Perhaps tomorrow will be a clearer day. We're waiting for more conviction selling. And here is a chart of the TNX, and you did see yields climbing higher again. And this is why I'm saying for the bears and the shorts, don't get too excited here. Wait and be patient, because the market could be pulling a trick here, aka a bear trap. And when you look at the TNX chart, you can't help but to see the formulation of the the bull flag, meaning the yields are given the benefit of the doubt, gathering energy to blast higher all the way to 1%. Until and unless we see a big decline in the TNX, closing the gap, taking the bull flag formation out of the table, until then, I'm not too excited by the reversal in the market today. We do need to see panic in the market to see a massive sustainable reversal. What does panic mean? A rush to buy the US dollar and a rush to buy bonds. Neither of those took place today. And here's a chart of Apple. We talked about it from a 15 minutes perspective, that we did see a double top formation yesterday, and we are expecting Apple to revisit the support of 117. Apple closed halfway at 118 instead, and perhaps we're going to see further declines tomorrow, and we will wait and witness how Apple will react at the 117 support. Moving on to Tesla, and we did see a big pickup for Tesla today. You see the name facing resistance in the morning at the very important level of 452. After breaking the resistance, rechecking 452 and confirming it as support, you did see Tesla blasting higher and even recapturing the old trend line. And to illustrate that, let's move on to a daily chart. And right away, you see the uptick in volume. Yesterday, we did see an uptick in volume. It was not as impressive as today. And you actually saw more selling in yesterday's volume. However, the story today is the contrast of yesterday. We saw another uptick in volume, higher than yesterday, but the majority of the volume traded today was for buying, meaning that we did see a surge in options buying, call options buying, that is, for Tesla. What happens when you buy a call option on Tesla? The person who sold you that call option has to buy the stock as a hedge. And when option riders buy Tesla stock, as they did today, you see the massive gain in the name. Here is the risk though. What if we don't see another follow-up tomorrow from options traders buying calls on Tesla? These riders who wrote the call options are now sitting holding a lot of Tesla shares, and they could decide, hey, we made a lot of profits already and we're not seeing more call options buying, meaning we cannot sell call options to make money from holding the stock anymore, and we want the call options that we already sold to expire worthless. So they start dumping the stocks they bought, flushing the name lower. So if you are a Tesla bull, you want to see two things. Number one, another follow-up tomorrow from option traders buying more and more call options, forcing more sellers to buy Tesla shares, thus driving the stock price higher. The second thing you want to see is a weekly closing above the trend line, thus recapturing the old trend line, which is a very steep trend line, by the way, very hard to recapture. So closing the week above it means recapturing the trend line, and it will signal and show strength and momentum in Tesla stock. And here is a chart of Alibaba, a daily chart. And a lot of traders are asking me, should I buy Alibaba right now? Here's the thing. Yes, the name is oversold. I see it. I'm not blind. However, don't chase the name. Let the stock prove itself to you first. What do I mean by that? The stock is closing at about 256. We know what the next important level is and where traders are setting their buy orders at. It is the obvious number of 250. So why not wait till the name declines to 250, see how it reacts, and then buy it? And by the way, what do? If you see the name climbing higher and you missed the boat, you should not feel bad about it. You wait until Alibaba reaches the 266 level of resistance, and you want to see strong momentum enough to crack the 266 resistance and close above it, and then you buy the name. Again, it is the same advice. Don't chase the chart. Let the chart prove itself to you first, and then you hop on the trade. Moving on to Honda Motors. Here is a weekly chart for Honda. And you do see the resistance level that I picked for the name, 29.35. It has been an impressive run for Honda. Big gap up candles from a weekly perspective. And here is what I see. I see the level of 29.35 as my entry price to short the name, and I did buy put options on Honda. And the exit price is refilling the gap of 26.35. It is a tight range, but again, Honda ran really hot, and it is time for a reversal to close the big gap that the chart left open at 26.35. Again, this is not a daily chart. This is a weekly chart. So gapping up like this is not very healthy technical wise. Here is another name, Innovo, from a 1 week perspective. And the trader is asking me, what do you think about Innovo? Bill Gates is backing it. It is a good investment or a bad investment. What do I do here with Innovo? And my question is, do you want to trade Innovo or do you want to own it? Do you believe in the company and the story? Remember, I worked as an M&A analyst for a big biotech company here in Southern California. My job was to look at these speculative pharmaceutical pharmaceutical names, even way smaller than Innovo, and evaluate them financially and give a valuation for my company to acquire new pharmaceutical companies. And the majority of these companies are pre-revenue, meaning that they're not making any profits or revenues yet. They only have certain products in the pipeline, and you have to value them based on the potential of these products on the pipeline. It's very tricky, very exhaustive work. It could take days, even weeks, to create a valuation for one company. So if you want to invest in Innovo in the long term, you better be a believer in whatever they have in the pipeline, because the company does not have sustainable stream of revenue yet. You want to take a look at it from a technical perspective. Yes, I see the head and shoulder formation that is supposed to go to the downside, etc., etc. But if you are looking for an investment opportunity in the biotech or pharmaceutical sector, why not just buy the ETF instead? Buy the XBI, the biotech ETF. This way, your eggs are not laid in one basket. If Innovo fails, you're not going to lose your money because you have a bet on the entire ETF instead. That is always my recommendation for investors who are looking to invest in pharma and biotech names. I say buy the ETF instead. Don't put all your hopes and dreams on one name. Innovo could work, but also there's a flip side to that coin. It could fail. What do you do if the name fails? Are you just going to lose your money? You don't want to be in that position. Buy the ETF instead. And here is the last chart of the day for General Electric. This name has been on a tear as well from a daily perspective, up significantly since the bottom of 550. I do see the resistance level of $10, and you see the name reversing today. The daily chart is very overbought, and it is ready for a reversal and a decline. But you have to keep in mind one thing. If you're going to short General Electric, you're doing it for the short term, for a trade at this point. Because when we switch to the long-term picture, the monthly chart, what do we see here? We do see the chart code support from the 09 bottom of 550. And it has plenty of room in the RSI, the monthly RSI, aka the long term, to climb even higher. And my target here is 1250. I do think that 1250 will be a significant resistance for General Electric and a point for longs to take their profits. But switching back from a daily perspective, if you're not a long-term investor, if you are a trader, the level of 10 is solid resistance from a daily perspective, and the chart is overbought and it is ready for a reversal. And now let's move on to conclude this video. We have seen that the mysterious entity stopped pumping the market overnight. What happens when the pump doesn't happen and doesn't work? Because retail traders are not picking it up. You will see selling taking place instead. We saw that at the end of the day yesterday and a lot more today. The tides are shifting to the bearish side, and again we're waiting and waiting and waiting for players on the sidelines to hop in, rescue the market, and push it higher. The players on the sidelines are saying, we're not getting in. Go down to a more attractive price first, and then we will deploy our capital in the market. Furthermore, we have the new concerns about stimulus, that stimulus is not going to be here. What happens to the fourth quarter earnings without stimulus? More weakness for the consumer. All of these expectations for fourth quarter gains will have to be tampered down instead. And remember the three conditions that we are looking for. We're looking for the VIX to close above 24.8 from a weekly perspective, not just by a hair, but by a lot. We're looking for the VIX to close at 26, 27 decisively. Also looking at a decisive movement for the TLT blasting higher once again, showing appetite for investors to switch from stocks to bonds. And I'm looking at the level of 162. That will show me that the TLT is very strong and we are seeing the tide shifting in the market. And the last condition here is Apple experiencing a harsh rejection from 120. What does that mean? We broke 120 already, but there is still a chance that Apple could gather some steam and give it another shot. So what you want to see is further weakening in the name, reaching 117 and getting rejected from 117, flushing lower than 117. That would be your signal that we are saying goodbye to 120. Apple goes lower, so will the NASDAQ, the VIX exploding higher, the SPY going lower, TLT catching a bid, no more appetite for stocks. These are the conditions that will let you know right away we're experiencing a reversal. So keep your eyes open and we will see what the market does tomorrow. Whether it's going to pick up on the same rhythm today, declining further, or playing the bear trap, the trickery, and bouncing higher instead. That's all for today. Thank you for watching and good night. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.